Just the same way you pack your bags without leaving any important thing out, dust off your shoes, and become mentally prepared for a big journey ahead, it applies to holding investments, especially cryptocurrencies. We have been told the same story over and over again, but it should make a significant difference this time. The crypto market is volatile, and there may be overnight gains, but they can fizzle anytime. If you don't get the gist, the hurdles will knock you over. As a crypto expert, if you were to write a letter to people who rushed to invest in crypto during the 2021 bull run, what would be the content? Will you start with an apology or criticism targeting their failure to make salient research before jumping in? The 2021 bull market run was a deceptive trap for many. Cardano ADA amounted to $3.10, and everyone became a dreamer, anticipating that the price would go higher. However, disappointments crowded their hopeful adventure when things went south. The problem is not the crypto market, but investors who want to skip straight to amassing huge returns on investments without learning the basics. What are the basics? Do your research. Don't invest money you can't afford to lose. Diversify your crypto portfolio. Investing in meme coins should be a smart decision. There are many others, and they're still valued today. Less frustration sets in when these rules are kept. So if you're holding Cardano ADA, there are so many things you need to prepare for. Cardano ADA fell more than the broader crypto market recently, and just before the trading app Robinhood was set to delist them. Remember that on June 9th, Robinhood said that it would end support for ADA, Sol, and Matic based on their latest review. These decisions came right after the three tokens were named as securities in the SEC's lawsuit against Binance and Coinbase. Since Robinhood announced its decisions, the price of the three crypto assets have kissed the lows. Right now, users of Robinhood's app will be able to trade 15 different cryptocurrencies, including Bitcoin, Ethereum, Dogecoin, Avalanche, and none of which are named as securities. Before the SEC raging at Cardano ADA, the crypto media was already divided about the cryptocurrency. Cardano ADA has attracted so many criticisms, and back in May, a Cardano hater claimed that the Cardano founder, Charles Hoskinson, and his brainchild get away every year after year without anything to show for. It's unbelievable, still in the research phase? He wrote. Charles Hoskinson tweeted in response that he finds such comments and similar ones on Twitter about Cardano bizarre, and wondered what the person and other Cardano critics mean by anything to show for. He tweeted, "It's bizarre that I see a lot of these comments on Twitter. I wonder what the definition of anything to show for means to this guy and the others. Honestly curious." The truth is that Cardano is growing slowly but surely. So many people fail to understand the strategy because they're used to the fly-by-night projects. If Cardano has nothing to show for, then what is the essence of this video? If Cardano really has nothing to show for, why are investors holding on to it? Just a bunch of critics and of course their lies. Also, Cardano's brutal 2022 may be far from a distant memory, but the scars are still evident. According to a report from Sentiment, small to medium-sized investors holding between 10,000 and 1 million Cardano ADA coins have been hesitant to accumulate more of the cryptocurrency. ADA's price experienced a continuous decline over the past few months, which could be the reason for reduced holding. This cohort of ADA holders ramped up accumulation during the 2019 bear market. However, they ended the same during the final stages of the 2021 bull market, when the ADA price touched $1.30. After this, the investors began distributing ADA tokens more than they bought, and this was when ADA traded for as low as 33 cents. If we flash back to March of 2023, according to Into the Block, more than 80% of all Cardano holders suffered losses, a figure equal to 3.53 million addresses. At the same time, only 682,920 addresses were profitable, which is less than 16% of the total. Another 173,770 holder addresses, or 4% of the total, broke even at the current ADA price at the time of this writing of 33 cents per token. The three largest groups of unprofitable Cardano token buyers can be identified. The first group, with a total of 669,370 addresses, purchased ADA at prices between $1.71 and $2.97. The last time such prices were observed were in the second half of 2021. The second large group of 560,940 addresses is those who purchased ADA below $1.71, but starting at $1.29. Finally, the third group was buyers who purchased tokens between the 40-cent and 50-cent mark in March. Simply put, we're still feeling the stings of the previous bearish year. The situation got worse when the FTX exchange, founded by Sam Bankman-Fried, collapsed. The crypto market was plunged into deep turmoil, which led to massive sell-offs, especially for coins like Cardano ADA. Discussions about the collapse of the FTX exchange lingered for a while, and currently it looks like there is not yet hope for Cardano. Recently, a renowned crypto analyst, Benjamin Cowan, founder of the Into the Cryptoverse, raised concerns about the future of Cardano's native token ADA. In a recent Twitter thread, Cowan shared his perspective on ADA's price action, indicating a potential downturn on the horizon. According to the crypto expert, the ADA to Bitcoin exchange rate currently stands at 900 sats, a level reminiscent of 4 years ago. He highlighted that historical data suggests that ADA could experience a significant drop within the next 5 to 6 weeks. Benjamin Cowan believes that the altcoin market can be unforgiving, warning investors of a potential 50% decline. Furthermore, the analyst elaborated on his research, presenting a chart illustrating his projected direction for the ADA price movement against Bitcoin. Drawing from the token price history, Cowan outlined a trend line starting from the bottom of 2018. According to this pattern, ADA is at risk of revisiting price levels last seen in the third quarter of 2019, potentially occurring in the same quarter of 2023. Cowan hammered that as an analyst, he primarily evaluates altcoin charts about Bitcoin. However, his skepticism extends to ADA's value in dollars as well, as he anticipates that the coin's price may revisit previous lows as the year comes to an end. It remains to be seen how Cardano will weather this predicted storm, but Cowan's analysis serves as a wake-up call for those invested in said altcoin. The future of ADA hangs in the balance as investors brace themselves for a potential price fluctuation in the coming months. We're all scared of the foreboding, but we'll keep holding, right? The Bitcoin bull market is inching closer, and historically, it is a good time to hang our hopes on the ropes. Lately, speculation around a potential Bitcoin bull run has surged amid the ongoing exchange-traded fund frenzy. Observations made by leading analyst Dave Weisberger has added more fuel to the fire. He recently commented that BlackRock's proposed Bitcoin spot ETF has a strong chance of gaining approval from the US Securities and Exchange Commission. The sentiment further suggests that a likely approval could catalyze another Bitcoin rally. Plus, Weisberger indicates that BlackRock's ETF proposal appears to address all of the SEC's concerns, except for a potential bias against Bitcoin. This reflects that the assets management giant Bitcoin ETF proposal robustly tackles the SEC's prior issues about market manipulation and surveillance, which have been traditional hurdles to approval. The quest for launching a Bitcoin ETF has been a tumultuous journey, shrouded by several high-profile failures. A significant example was the attempt by the Winklevoss twins, Cameron and Tyler, known for their early involvement in Facebook. The duo made a remarkable effort to introduce a Bitcoin ETF in 2013, an initiative that thrust them into the center stage of this ongoing saga. However, despite their best efforts, the SEC rejected their proposal in 2017 and again in 2018, basically on the grounds of potential for fraudulent and manipulative practices in the Bitcoin market. If the SEC flips the switch and sends a green light about BlackRock's Bitcoin ETF, we could see a substantial wave of institutional capital surging into the cryptocurrency sector. Generally, ETFs represent a safer place for mainstream investors and institutions, and a Bitcoin ETF is expected to follow this pattern. The mounting anticipation of this possibility has already set Bitcoin's price on an upward trajectory, but it's important to remember that the SEC's verdict is yet to be etched in stone. You know the commission has been known to delay cryptocurrency ETF decisions. However, with BlackRock, a true titan in the industry, in the fray, there could be a tip in the scales towards a positive outcome. Dear Cardano holder, this is a journey and there's still several bumps ahead. Cardano has great fundamentals and potential, but the hurdles are unavoidable. But that's going to do it for today's video. Make sure you click on the subscribe notification buttons, and we'll see you in the next video.